Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the forexpeacearmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit forexpeacearmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, let's take a look at the euro currency again and try to create the trading plan for the coming week. Well, that's no secret probably that on the previous couple of weeks market behavior was really tricky, blurry and very difficult for analysis. But currently on the daily time frame we have some patterns that shows us more or less clearer direction. Well, we do not know whether this pattern will work or not. Maybe currently market as bullish as never, but personally I prefer to rely on the patterns and setups, on the clear patterns and setups that I see, and only if they will fail, that tell us something. First of all, it will tell us that market behaves quite opposite, and this shift probably the sentiment and shift the assessment of the current situation. In this case we will start to search the opposite solution, and we will try to establish the opposite position. But until these patterns hold, whether to trade these patterns or not, that's a bit different question. But until these patterns hold, personally I do not want to go against them. And I think that these patterns that we could stick with in the beginning of the week. Mostly I'm speaking about the two stop grabber patterns that we have here. That was the first stop grabber, and it takes the shape of the two days trading sessions. Simultaneously this pattern has become the wash and rinse of these highs. So market just move up, clear out the highs, returns right back down. Second pattern stands right here. That is Friday's action, and that also bearish stop grabber. These patterns have a bit different targets. This pattern have this target, it's around 132 area, while this pattern has this target, it's around 133, right at the weekly pivot support 1 and the common week. Also very close stands the FIB support. Invalidation points of these patterns correspondingly the tops of these bars here and here. What else do we need? In fact, we have all that we need. We have patterns, we have the reasonable points where these patterns will fail, and if market will take out of these points, this will tell us something. This will tell us that probably, since market has destroyed the bearish patterns and has returned right back above the previous highs, then probably market currently is bullish. But now we have the bear trend, we have side-by-side stop grabbers, and we have probably here some divergence. If we will draw the MACD indicator, I did not see it on the current chart, but probably if you will draw a view, probably will get some divergence with the MACD. Well, and personally for me, until market will not return right above these highs, it's difficult to say that market is bullish and that this bullish action is continuing. Until that will happen, the chances for deep retracement will exist. If you will read our analysis of the high time frames, you'll see that there we mostly come to conclusion that market is more bullish rather than bearish, but that is in a bit longer perspective, in the longer time frame. In the short term perspective, this retracement down, if market will take out of these lows and will show retracement, say, to the confluence supports from 131.70 area, we probably will not see this bounce on the higher time frame because it's rather small for the weekly time frame. That's why this retracement absolutely will not destroy and will not change the sentiment on the weekly time frame. That's probably some mostly technical issue, but that our context for trading. Now let's take a look how we could deal with it in the beginning of the week. First of all, on the hourly time, on the 4-hour time frame, we see that both of these patterns are the part of this head and shoulders pattern, and that is very useful. Thus, Friday's stop grabber is in fact the right shoulder, and it has invalidation point right here. It's around 134.10 area approximately. That is the greatest stop grabber, and it has the invalidation point right here, right at the top of the head. But that is very useful, and the fact that stop grabber is a part of the head and shoulders pattern could give us significant assistance. Why? Because the failure moment of the head and shoulders pattern and the stop grabber pattern coincide, and they coincide in this stop. Take a look. If market will move above this area and shift to the upside, it will erase the stop grabber pattern, but simultaneously it will tell us that something is wrong with the head and shoulders, because this will erase the harmony of this pattern, and that will that in fact could become the challenge of the destruction of the head and shoulders at all. That's why this point is very significant. Although at least by the just theoretically, this stop grabber pattern on the daily time frame, the larger, could still hold if market will start move here, because invalidation point theoretical is right here. But moving above this stop already will put the foundation for potential failure of this pattern, because the significant move above this point will make the challenge of destruction of the whole head and shoulders pattern, and that simultaneously will tell us that the failure of the stop grabbers also possible. That's why it's, in fact, I see the great assistance with the moment that stop grabber is the part of the head and shoulders pattern. But until that, you could see that here it looks nice. Market will open somewhere around the weekly pivot point, and pattern itself looks not bad at all. So let's be focused on the market behavior with the first smaller stop grabber, how it will behave around it. On the hourly time frame, precisely speaking, I have used this 30-minute chart, but on the hourly time frame we'll see the same picture. We see that market stands at the resistance at agreement, since it has completed this ABCD pattern right at the 618 resistance of the head and shoulders of the thrust down. So that's another opportunity for starting move to the downside. Maybe market will show some bounce to the upside, somewhere to 133.90 area. And after that, if our trading plan will start to work, if we are right with it, probably somewhere around market should start move to the downside. Let's see what will happen. At least current scenario and current price position led us to place rather tight stop. So if we assume that we will enter somewhere around 133.90, our stop will be somewhere around 134.14. So that is about the 30 pips stop. It's not very significant stop. If you'll take a look at the potential target on the daily time frame, that will be really a very significant risk-reward ratio. Well, and in fact, market now stands very close to the invalidation point. That also led us to take very attractive trade. So let's see how market will open, let's see what will happen. But in general, current setup looks very harmonic in terms of the different time frames, as one time frame add to another time frame. So on the daily we have stop grabbers. On the 4-hour time frame, the stop grabbers have the shape of the head and shoulders, while by taking a look at the right shoulder, we see that market in fact has accomplished ABCD right at the resistance, at the 618 resistance, and that is the agreement on the 30-minute chart. So in fact, you can see that looks very nice and very harmonic. Well, now all that we could do is just to wait and see what will happen in reality when the market will open on Monday and Tuesday.